Let's have a look at working 6 for Mike McMahon 2014 sole trader question. So it says patents which incorporate 3 months investment income are due to be written off over a 5-year period commencing in 2013. So once again, there's 4 steps to this adjustment. So write these down on a post-it and stick them up somewhere so you know the steps to use. So remember, patents, these are an intangible asset that we have that goes in the balance sheet. It's kind of like it's a thing that company can apply for that people can't copy their design on their product. So what happened here is that we have our patents, but for some reason, someone has included our investment income, 3 months investment income in with our patents. So we need to remember, patents is an asset, investment income is an income. So assets are on the debit side, investment incomes are on the credit side. So we have to find out how much our investment income is for the year. Then we need to calculate what is the 3 months investment income that we have received and calculate our investment income due. Then we need to calculate our new patents figure by taking our investment income out of it that was paid. That 3 months investment income, we need to take it out of our patents by adding it back on, and I'll explain that to you in a second. And then we need to calculate how much is to be written off of your patents and recalculate our new patents figure. So the steps then, so your first step is going to be your investment income. So you calculate the investment income for the year. That goes into your profit and loss at operating income. Second step then is to calculate the investment income that was incorporated in the patents. And this will be used to calculate your investment income due and readjust the patents figure. Step 3, calculate the investment income due. This figure goes into your balance sheet as a current asset. Step 4, calculate the patents figure. Okay, that's going to be used to calculate the figure to be written off. Step 5, calculate the written off figure by using the figure from step 4 and dividing it by the number of years in the trial balance. That figure goes into your profit and loss as administration. Remember to take the written off figure away from the patents figure to get the new figures for patents for step number 4. That goes into your balance sheet as an intangible asset. So let's have a look at step number 1, calculate the investment income for the year. So our investment income, we'll go back to the question, have a look at the trial balance, see where investment income is. So you got 3 months or 3% investment income at 100,000, and that was invested on the 1st of the 4th, 2013. So you got the 4th, 5th, 6th, 7th, 8th, 9th, 10th, 11th, 12th. So you got 9 months investment income to calculate here because you only have it for 9 months of the year. So it's going to be 100,000, multiply that by 3%, multiply that then by 9/12. And that's going to give us the yearly figure. And that's going to be added onto your operating income. So that should be 9/12 up here. So that's the yearly amount that goes into your operating income. So you want to add that to your operating income. Now it tells us in the question that we have received 3 months of this. So it says patents which incorporate 3 months investment income. So we have received 3 months of this 2,250 we have received. So we need to find out how much of that have we received and take it away to find out what is our investment income due. So we can do that in the next working. So 2,250. We're going to multiply that by 3/12 because we received 3/12. Sorry, we received 3/9 because we only have it for 9 months. So we're going to get 3/9 of the 2,250 because we don't have it for a full year. We only have it for 9 months. So we received 750. So what's left to receive then is 1,500, and that's going to go into your balance sheet as a current asset. Okay, so the first step, find out what investment income due is, get the investment, multiply it by the percentage, and then multiply it by how long we've had it for. That's going to give us 2,250. Then find the investment income due. So it's 1,500 because we received 750. That's how much was put into our patents. We got that by taking the figure up here, multiply by 3 months, that was taken from the question, and we multiply by 9 months because you only have it for 9 months up here. So this denominator is going to be the same as what was up here in the investment income. And that's going to give you a balance sheet as a current asset. The next thing we need to do is we need to find out what our patents are. Alright, so our patents in the question are 40,400. So that's how much our patents are. So 40,400. Now we've incorporated 750 in there. So someone put 750 into our patents that shouldn't be there. So what we need to do is we need to add that back on. Now the reason why we add that back on is double entry. Alright, so our patents is an asset. So your patents, our assets, always go on the debit side. So in here, we're going to have 4,440. That's what we have in our assets for patents. Investment income is an income. So this 750 should be on the credit side in our investment income because investment income always goes on the credit side. Alright. So with the credit on the credit side, 750 goes on the credit side. So the double entry, if 750 goes on the credit side in our investment income, then the double entry, you're going to credit one account and debit the other account. So we need to debit our patents 750. So because we're taking it out, it's not adding or subtracting like we usually would do. We're using that double entry, debits and credits, to calculate this patents. So that's really, really important. Patents is an asset. Assets always go on the debit side. Income for investment income is a credit. Credit income always goes on the credit side. So to put this investment income into our income account, that 750 should be in our income account or in our investment income account. It has to go on the credit side. So you credit one account, you debit the other account. So because we're debiting our patents, this 750, we're actually adding it on to our patents up here to take it out. So it's not plus and minus, it's debits and credits. So it's this double entry accounting, the rule for double entry. That's one that kind of gets students. So your patents figure to be written off is this figure here. So this is our figure that we're going to use for patents to help us calculate how much is going to be written off in the question itself. So our next step then is to calculate how much is to be written off. So we're going to take our patents figure that we've calculated in part 12, which is 41,150, and we're going to divide that then by how many years it's telling us in the question. So in the question it's saying patents are to be written off over a 5-year period. So we're going to reduce our patents by 5 each year. So 4,100 or 41,150. Divide that by 5. We're going to reduce our patents by 8,230 each year. So 8,230 then is going to go into your profit and loss account, and it's going to go into administration. So that's how much reducing by. So then we need to readjust our figure for patents that we have here. So the amount for patents is 41,150. And we're going to take away our written off, which is 8,230, and that's going to give us our new patents figures that goes into the balance sheet as with tangible assets. So we're going to get 32,920. And that's the figure that goes into your balance sheet as an intangible asset. Okay, so anytime you get patents, there's going to be 3 or 4 steps to it. First thing you're going to do is you're going to find out what is the investment income due. So you're going to take the investment income from the question, multiply it by the percentage, multiply it by how many months you have it for. That's going to find the investment income we're supposed to receive. That's going to add to your operating income in your profit and loss account. Then we're going to calculate the investment income due. So of this 2,250, we received 3 months of it. So 2,250 multiplied by 3/9, because we only have it for 9 months, gives you 750. That's how much we did receive. So we've still to receive 1,500. That goes into your balance sheet as a current asset. Then we need to readjust our patents figure. So that's our debits and credits. So to take your investment income out of your patents, we add it on because it's going to go to the credit side of your investment income. So it needs to go to the debit side of your patents. That's why we're adding it on. So your new figure is going to be 41,150 for your patents. That's written off each year. So each year we're going to write it off by 8,230. That goes into your balance sheet as an administration. And then we need to readjust then our patents figure to find out what is our new figure for this year that goes into your balance sheet as an intangible asset. So remember, stick those 4 steps on your post-its. That'll help you remember what the steps are involved when you come to do a patents adjustment.